Sudip Bandyopadhyay, who's joining us on the show right now. Very good afternoon to you, Sudip. Thank you so much for joining us on ET Now. Let's talk about the markets because a lot has transpired over the last 1 week or so. You've seen the entire market construct change. How should one actually position themselves right now?
I think yesterday what we saw was a one-time issue. Obviously it was looking little over enthusiastic, the market yesterday. So a little bit of correction today was expected, and we are seeing pretty much that getting played out. However, a lot of positives are there in the market, and we can't discount that. The entire trade war scenario, which was developing around us with the US president going on about it, I think things are cooling down a bit with their kind of truce with China for 90 days with very reasonable tariffs on both the sides. August definitely well for US economy and the global economy as well. Of course, the peace which prevails between India, Pakistan now, as far as geopolitical situation is concerned, is most welcome. So under the circumstances, I think FII buying in Indian markets will come back, and that is what we are seeing. It may not happen at one shot; it will happen gradually. And we have to remember that in spite of the correction which we had seen earlier and what we did see today, I don't think Indian market is cheap. So we have FIIs coming. We will have FIIs coming, but they will be careful and they will be selectively entering Indian stocks. I tend to believe that large caps will generally have a increased share in FII portfolio compared to even what they had earlier. They always had a bias towards the large cap, but the bias will be more pronounced now, considering the fact that large cap is still available at relatively better valuation compared to the attractive mid cap and small cap shares.
Interesting. So Sudip, afternoon firstly, tell me, where is it that you think there is a little discomfort when it comes to valuations, wherein you think they're a little high?
Well, I think, defense is one area where I think, again, we are seeing a valuation reaching a level which is, becomes unsustainable beyond a point. Of course, defense is the flavor of the season, and there is huge opportunity for Indian defense companies, but the valuation still looks very, very rich. The potential is undeniable, but the fact that you are discounting the potential of a maybe 5, 10, 20 years into a valuation today, which doesn't augur well from an investor's point of view. So I'll be a little cautious. I'm not saying all defense companies. Defense electronics does look good even at current level. Shipyards from a long-term perspective does look good, but one has to be a little careful. And if you're buying defense stock, be in it for the long haul. Don't expect super normal returns in the short term. The other segment where I think I'll be a little careful is IT. I think we did see a rally yesterday and bit of a correction today, but one has to be still careful on IT because the problems in US is not yet over. We'll have to wait and watch, and unless US gets back on real fast growth track, IT companies' performance will always be a bit subdued.
And I would love to talk a little bit more about this defense stocks. But Sudip, stay with us. Got to cut across to Umang Vora, MD and Global CEO at Cipla, talking about their quarterly performance.
We don't see the impact. In any case, we are a generic sector. The purpose of what we do is to provide medicines to people who really need it from an affordability perspective. So as of now, we don't see any impact of tariffs on our business. And of course, there's a lot that's going to happen, between the US government and the Indian government, and of course, members of the IPA. We're monitoring all of that, and we don't expect material changes to the business environment for generics.
Her second question is, what kind of impact is Cipla seeing from Trump's decision on the prescription drug price cuts?
Yeah, I think, it was announced yesterday. So there hasn't been enough time for us to fully assess what is the implication of that. As of now, what we understand is that this is largely targeted towards branded drugs. As of now, what we understand is that this is a voluntary measure that that perhaps companies will be taking. There are aspects of MFN clauses, etc., from what we've read in the public domain. We do not know how that will be implemented and in which manner. So as of now, from a generic perspective, I think generic prices in the US are already very significantly comparable with the rest of the world. In some cases, lower. So we don't believe that, at least for now, based on what the promulgation says, we think this is more a branded sector impact as against anything on the generic side.
Her third question is, what are the future drivers of growth in North America?
There are many. I think we have our own pipeline that will unlock as our facilities and our products get ready and closer to launch. We already have a couple of imminent launches that should come in. We're also looking forward to the unlocking of our pipeline that we've communicated earlier, which was the peptides. So yeah, I think we see a lot of portfolio momentum adding to the Cipla trajectory there. Possibly enough to start to substitute, the reduction in lenalidomide.
Thank you, Mang. That's all from Rishika. Our next question is by Vishwanath Pilla from Money Control. Vishwanath, if you could go ahead and ask your question. Vishwanath, can you hear us?
There might be a problem with the audio because both the.
Hi, sir. Can you hear me?
Yeah, hi, Vishnu. Thank you for saving the day.
Yeah. First of all, congratulations, sir. I mean, all the indicators I've seen, FY25 is the best year, if I'm not wrong.
Yes, that is right, Vishnu. This is fairly significantly a new level for us, both in terms of top line and bottom line, as well as profitability. Yes, thank you.
Sir, any outlook for FY26, sir, on, if possible, on revenue or EBITDA? What is your expectation?
No, we are looking at growth, Vishnu. Despite what we're going to see with lenalidomide, the company is still aiming to grow over where it is today, and because there are multiple moving parts, right, between just the earlier questions on tariff, on drug pricing, on the geopolitical situation in between India and Pakistan, and multiple things. The dollar situation. I just think it's there are multiple options and multiple avenues where performance could go. But we want to continue to grow despite lenalidomide evening out.
So there are enough.
Okay, that's Umang Vora talking about as to how there shouldn't be any material change to business environment for generics, at least when it comes to the tariff tirade which is currently on. Cipla, largely an inline set of numbers, did see a little bit of volatility post the numbers and now stabilizing about the 0.5% gain mark. But Kunal, I want to check in with you on some of these defense names, and that's the red flag that Sudip did talk about. While they look good for a long-term hold, but that's where a little bit of valuation discomfort is. What are you seeing on the charts for a HAL and BEL in specific?
I think both these charts, specifically for example for BEL, the stock is coming very close towards its lifetime high levels. I'm not sure whether the stock has already broken it, but I think 334.5 thereabouts was the time when the stock had come back to that kind of level in 2024. And post that, the stock went into almost like a 30% correction. I think 250, 260 was the low for BEL. So the stock has done its entire process of going through a correction which lasted for more than 12 months. And then gradually we've seen the stock picking up pace and then acting as more like a leader for the entire defense pack. That I believe is a very strong quality sign that we are looking at a breakout yet again for many of these stocks after almost 1.5 odd years of these stocks going to correction and then a rally. Same is the case with HAL. The stock has been a slight bit of an underperformer when we look at this on a relative basis. But I think at current levels of 4,500, 600, I would believe even HAL looks extremely attractive. My sense is that many of these stocks are showing signs of a synchronized breakout. there is a volume uptick, and these stocks, they move into stages of a rally and then a pause for themselves. So it's not as if that these stocks are going through a vertical upside. These stocks are giving those intermittent corrections as well as pauses in a trend. That, I believe, is a strong indicator that this trend is here to last.
Right, so that's the take coming in on some of these defense space. Sudip, I wanted your view on specialty chemical space, because the fact that you saw this entire Trump tariff announcements and you had the shift back again to the China plus one strategy, which Indian specialty chemical players would have likely benefited. Now that you have some sort of a trade truce that is in place when you talk about US and China, what does this mean for this entire space?
I don't think anything changes as far as this space is concerned, particularly on China plus one. I think China plus one started much before this, tariff war began in early April. The need for diversification out of China and having an alternate manufacturing and supply base was felt because of geopolitical concerns much before the tariff war had started. So I think that rationale continues to remain, and most global manufacturers are looking forward to having a China plus one situation, definitely. Now, probably this tariff war, had it continued, would have led to completely dropping of China. That was not really feasible at least in the short to medium term, and probably that's not ever going to happen the way things are moving. But China plus one logic for Indian specialty chemical manufacturers does remain, and the opportunity is definitely there. Now, a lot of things happened over the last couple of years whereby this sector was really bombed out. The performance was bad because of multiple reasons. There were glut in the market. China was dumping products in the market, and there was very clearly lack of demand for their products. But things are changing. The supply overhang is over, and demand is increasing. And as far as the performance is concerned of specialty chemicals, agrochemicals, if you watch carefully the Q4 numbers, I think things are definitely showing signs of improvement. From an investment point of view, I think if somebody is an aggressive investor, it is probably worthwhile looking at buying some of the leading stocks in these sectors. I can talk about UPL. I think it's a good buy from a 1 year kind of a hold perspective. You can look at SRF. It's a good buy. So on and so forth.
Okay, that's the take coming in on what's looking good or not within the specialty chemical space. But I just want to check in on where the market is settling in for the day. And after that big move yesterday, today, of course, we're headed in almost for an over 400-point fall for the Nifty futures, 24,620 thereabouts is where we're closing in for the day. Of course, technology has been quite a big drag, but similar is the case been with some of the key names like in Eternal. Some of the banking names have seen some profit taking. Hindalco didn't see a rub off from Novelis's performance, down 3%. Trent was lower. Bharti fell about 3%. Innocent Bank was also lower, and that's been the case with the rest of the blue chips like in L&T, Reliance as well, which is now off by more than 1.5% on the futures. Sudip, to your mind, where do you see leadership actually changing hands if the up move were to stay by in the markets?
I think very clearly leadership has come back and is coming back to BFSI. I think pretty much BFSI will lead the rally. And there are multiple reasons for that. I think overall BFSI was never overvalued like many other sectors where the valuation comfort even now is there in BFSI. The leading BFSI companies, particularly the private sector banks, are doing exceedingly well on all parameters. Pockets of BFSI like gold finance are stabilizing, and opportunity for further improvement is there. Insurance is one pocket where a lot of reforms have come in and are coming in. So from a medium to long-term perspective, that does look exceedingly well. So overall BFSI sector, of course, you have to leave out these unsecured lenders, microfinance companies, etc. for the time being, considering the asset quality challenges which they are facing. But by and large, BFSI looks good. Apart from BFSI, the other segment where I think I have been positive is I just mentioned about chemicals and specialty chemicals. Things should start looking up in that space. The other sector where I have been having positive view is metals. I think it's volatile and it will continue to remain volatile because there are a lot of pulls and pushes as well as the global factors which does affect metals. But metals, by and large, I think with the kind of demand which domestic market is depicting, and the kind of demand which expectedly other global markets, including China, will have, I think metals should be in for a good time in this current fiscal.
Take on the preferred spaces in this market, but amid the ongoing tension, the airlines are taking a precautionary approach, and despite the reopening of 32 airports, they've majorly cancelled flight operations today. Samir Dixit, my colleague, is here with more details on what's really happening with the flights and the airports which were still under closure. Samir?
So yes, the government allowed the reopening of the 32 airports which were closed as a precautionary, as a safety and security measures by the government. But then, post the announcement of ceasefire, these 32 airports were open for the civil flight operations. But we have seen that on 12th of May, we saw that a couple of drones were spotted in a particular city, and after which the flights or the airlines, they are now taking sort of a precautionary approach in terms of resumption of the flight. And that is the reason that Air India has announced that they are cancelling the flights to and from Leh, Srinagar, Udhampur, Rajkot on 13th of May. Similarly, Indigo has also announced to cancel the flight operations from these particular airports, whether it be Srinagar, Rajkot, and several other northern airports as well on 13th of May. Going forward, they will definitely resume the flight. But in addition to this, SpiceJet has taken a sort of an approach where they will be resuming the flight on 13th. The only flight that they will operate to Srinagar will take off by around like 2:30 p.m. on 13th of May. But going forward, we expect that maybe in the next 7 to 10 days, it will take when all the airlines, whether it be SpiceJet, Indigo, Air India Express, they will actually rotating back to the regular schedule of the flight operations.
Right, Samir. In fact, talking about aviation, remember that aviation was one of the sectors that was hit pretty hard given the fact that you had Pakistan closing the airspace. What are sources telling you now, given the fact that you have aviation minister who's already chaired meeting with airline representatives?
Yes, definitely. This is a very important meeting that was chaired by the aviation minister with the airline representative. And this meeting was focused to understand that what sort of impact the aviation sector has gone through, specifically the airlines, what sort of impact they have faced. Especially earlier, we have seen the Pakistan airspace closure, which is still in place. And because of Operation Sindhu, the airlines were not allowed to operate at multiple airports. And if you count these two factors, definitely the airlines, they have faced a lot of revenue loss, a lot of financial challenges, and seeking that sort of impact, aviation minister met with the airline representative. The primary message that was conveyed from the government side is that we completely understand the kind of problem that the airlines are facing. But this is the moment that first the priority should be given to the convenience of the passengers, especially those who are having a confirmed ticket bookings if they are supposed to fly from the airports which were earlier impacted. For example, Srinagar, Dharamshila, Shimla, Rajkot. So these all airports, if they are supposed to fly, then they will be given preference. No cancellation or rescheduling charges will be levied. So that sort of convenience will be provided. And going forward, the ministry or the government is trying to analyze that how the support can be given in. From the airline side, it was a point that was raised to the government that Pakistan airspace closure, it seems that it will go for a bit longer period of time. And if this happens, then government should actively consider to provide some sort of relief to the airlines, whether it be in terms of financial support or the tax benefit. So that was kind of a request that was given to the government, and government will try to find out the way forward.
Thank you so much for that, Samir, for getting us all those crucial updates when you talk about the aviation industry and what your sources are telling you with regards to the aviation minister's meeting with airline representatives. Sudip, coming to you actually, and let's put the spotlight on the aviation and the hospitality space. Given the fact the way how things have transpired, this sector was among the worst hit. What's your take now? How should one analyze if you have to go ahead and invest in it for the longer term, that is?
Definitely from a long-term perspective, hospitality industry does look exceedingly good. And, the correction which happened on the back of this conflict was a great opportunity to accumulate some of the good quality hotel stocks. Indian hotels came up with a decent set of numbers. And post that, there was significant correction on account of this Operation Sindoor. I think at current level, definitely it's worth buying. Look at chalet hotels. Again, I think current level, it's a good buy. Lemon Tree, I think pretty much all the hotels, if you're talking about long term, I think all these are good buy. Travel and tourism volume increase is here to stay. And I think we will see continuous upside in this industry, which will benefit the hotel industry. As far as aviation is concerned, while the pretty much the same set of factors do remain, but valuation is a little rich, and we are going through a situation where aviation turbine fuel prices are at lower level. Any change in aviation turbine fuel prices and movement towards upward movement of ATF prices does affect profitability in a significant manner. So I'll be cautious on the aviation stocks, particularly, the one stock which is worth talking about is Interglobe Aviation. Valuation looks rich. Performance-wise, there's nothing to complain, but I won't venture to buy at current valuation.
Okay. Don't venture to buy out Interglobe at the current valuation for sure, even though the stock is a good long-term story. But Sudip, good to have you on the show. Thanks as always for joining in.